You said we can learn something from the earnings themselves and how the stock responds to them. What have we learned so far as we get deeper into earnings season?
Well, it's about 50-50. So 50% have been up, T+1, 50% have been down. That's worse than normal. This is in line with what we've been saying for quite a while now, as we think now we're in a period of multiple contraction. Right? If you think about the last 6 months, all that really happened was, the Fed pivoted, Treasury, I would argue, sort of squeezed the bond market. We had a duration rally into year end, and that affected a huge multiple expansion. It doesn't get a lot of press, but 2024 estimates for the S&P 500 haven't really gone up. Okay, they've been sort of flat over that 6-month period. It's all multiple expansion. So our call basically is that first of all, we thought 7 cuts was silly. I think a lot of people agreed with that. And now we're down to 1.5. So why wouldn't multiples come down in that environment? And I think that's what we're facing now during earnings season, is you've got to really put up a serious beat and a revision to the upside for the stock to go up. I'm very curious to see how that plays through the next 2 weeks.
What we're seeing right now in the earnings is not a cohesive story. I mean, honestly, you're seeing some areas where it's cost cutting that's keeping margins afloat, and other areas where you see, for example, demand for trucks in the U.S. going gangbusters. Are you seeing any themes that you can kind of grab onto so far?
The theme is that it's a very unbalanced economy, and that's the theme we've had for a while. So post-COVID, it's just been a very unpredictable environment for a lot of reasons. Some of those things we got really right, some of those things we got really wrong. And I think we're trying to figure out kind of what the next stage is. Let's look at the last year as an example. So a year ago, hard landing, recession was the consensus view. Market overpriced that. Then we got a soft landing priced in 2Q. Then we had a sort of a fiscal sustainability problem where growth got too hot and rates went up and we had a big correction. Then we went back to the soft landing, and now we're in no landing. So this is our view at the beginning of the year. It's like there's a 33% chance of all 3 of those happening. Soft landing, no landing, hard landing. And I think it's the same. So in other words, right now we're trying to price that no landing scenario, but I'm not confident that we're going to stay in that environment. And companies are a reflection of that, right? Some companies do better in that scenario. That's why they're doing better, things like energy, materials, financials. But is that sustainable? We're going to find out.